Okay, well, Arvind Sanger is joining us, Managing Partner at Geosphere Capital Management. Arvind, great to have you with us here. Good morning. Thanks very much. So we are left to reading what's going on in the underlying financial system, looking at, I guess, financial markets themselves and how they react, whether there is a bit of thawing or, the intensity of the volatility will likely remain very high. What's your own view at this point?
Well, look, the banking system in the U.S. doesn't have an asset problem in the sense that, their loans are fine. There is no loan crisis. Their government bonds have lost value, but if they're held to maturity, they're money good, right? The U.S. government treasuries are not going to be a problem. So the problem lies on the liability side. And the problem on the liability side is that there's so much nervousness about whether or not if somebody else is taking money out, if I don't take my money out and the money, banks always have an asset liability mismatch. They borrow short and lend long. And so I think the solution lies, which has been now talked about for the last day or two, is in guaranteeing a broader set of deposits, because if you guarantee those and the panic goes away, then the banking system is fine. It's the panic about, if I don't pull my money out, somebody else might put their money out and the bank will go under, that is driving this. So there is some talk today. We're seeing that maybe there is some way they might find to guarantee deposits. The problem is Congress is deeply divided, and I don't think the Republicans are going to be trying to do something like this. So it is going to be tricky. The solution is that, and the minute you do that, then the crisis starts to abate. So I think the problem is lot less deep-seated than the asset problems that preceded the 2008 crisis. So in that sense, the solution is out there. I'm not sure how quickly we'll get there.
Okay, Arvind, hi, good morning. But do you have any indication of whether we are close to the bottom for this market? I mean, there's so much bad news that has been thrown at it, right? There's an impending recession, there's a banking crisis, there's slowdown in growth, etc. But do you think that all of it has perhaps been priced in? Maybe another 5–10%, but that could be it.
I agree wholeheartedly. I think that the crisis is a lot less dire than it seems. It'll be interesting to see what the Fed does in a couple of days, because I think if the Fed sees the crisis as much worse, it'll pause. And in a way, I think the market will do worse if the Fed pauses, because people will say, what is the Fed seeing that we don't see? If, on the other hand, the Fed raises interest rates by 25 basis points, and at the same time there is some solution on the deposit guarantees, then I think the crisis quickly passes and the markets rebound quickly. So I think there's a couple of things out there this week that are critical that could help the market either gain confidence or get a little more nervous.
Hi, Arvind. Good morning. Arvind, we didn't speak too long ago, and you were fairly positive on the Indian markets. So now the incremental equity allocation will be moving to India, since you were as positive on it. And also, I just wanted your comment. Some on the street are comparing this 2023 with 2008. Going by the central bank action, the kind of data that we have, I'm reading a Bernstein report, they believe that that's not likely to be the case, and it's very, very different this time around. Are you in that camp?
Absolutely. As I said earlier, this is not an asset problem. This is not a bad loan problem. This is not banks doing stupid lending. This is about people getting nervous that, the liabilities side, the deposit side is not safe. We got to pull our money out because the bank might go under. So it's a very different crisis. If we take away Credit Suisse, which was a bad management, which had multiple problems, none of the other banks that are in trouble, we use First Republic as our bank. None of these banks are in trouble because they did bad lending or they did bad, decisions on that front. They just put their money in treasuries, and those treasuries have come down short term, but long term, I think the money is good if they're held to maturity. Now, as for the India question, I absolutely think that India does not have a banking problem. India has already gone through its NBFC problem, its banking, bad loan problems and all that. So this global crisis on deposit side is not something that has any India echo in it. Therefore, I think India is somewhat immune to that. It is not immune to a global recession. I think the risk of a recession, which I talked about last 2 weeks ago in your studios, is still there. And if anything, it's a little more heightened now in the West. But I think the Indian economy is somewhat less susceptible to the impacts of a Western recession than almost any other emerging market or major economies in the world. So therefore, I would be looking at India as a buy opportunity in this sell-off.
Yeah, I mean, Arvind, it's kind of crazy that from the Wednesday before last, when the Silvergate went down, right? That was when all of this began. Not last Wednesday, but the Wednesday before last week. The S&P is flat, and the Nifty is down 6%. So there is something else going on as well. I mean, which is the old rotation out of best performing markets into some of the poor performing markets. I mean, and of course, it's getting conflated with all of that, which is going on the banking side, right?
Yeah, it's risk off. It is risk off, and risk off is not always fair and thoughtful. It is knee-jerk and short-term. I think those knee-jerk short-term moves, which are not always rational, but driven by irrational fears, create opportunities. And again, day-to-day, week-to-week, markets can act strangely, but I think keeping a clear vision in mind is useful in these times. And I think the clear vision is that, this is not a 2008 type of financial crisis. And if there is overselling in sectors or markets where it doesn't make fundamental sense, then this is a good opportunity to buy.
Okay, on that optimistic note, we will let you go. Arvind, thanks a lot for joining in. So this is perhaps an opportunity to buy. This is not 2008. This is not